Welcome back, dear learners. Before the ad break, we introduced our combined cash and credit transactions. And my focus, as I said earlier on, it is on the trading stock account. So to begin with, we're going to see how cash journals would affect our trading stock account. The first journal we'll look at is what we call the cash receipts journal. In this journal, we record all cash that is received by the business. So all our cash received by the business, we then record it in the CRJ. Here is our CRJ. When you look at your CRJ, you can see you have your bank sales, cost of sales. This is what we're going to be focusing on because remember, my focus, as I said earlier on, it is on the trading stock account. So how would I record this cost of sales amount in my trading stock account? There it is. It is very important for you to understand that my trading stock account is an asset account. This is an asset account. That means it increases on the debit, but it decreases on the credit. Once we sell goods on cash receipts journal, this means my trading stock is going to decrease. Hence, you see now on my credit side, I have cost of sales, which is the cost of sales over here. Which journal am I posting from? The CRJ. How much was my cost of sales? 22,000, which is what you then see over there. Very important. When we get our cost of sales in the CRJ, we credit it to our trading stock account. It shows that we sold goods. Therefore, our trading stock will decrease in this case. Let us now go and look at another one. The next one then becomes there is the arrow pointing down there. The next one becomes your cash payments journal. You have to understand what is the cash payments journal. What do we record in the cash payments journal? This is a journal in which we record all cash paid by the business. So when we pay cash, we record that in the CPJ. Remember again, our focus is on the trading stock account. How is the CPJ going to affect our trading stock account? Let us see. Here is our CPJ. We have bank 63,350. This is the total amount that we have paid. But of this total amount, we have paid 27,900 for trading stock. This means we purchased trading stock on cash since it is in the CPJ. How then will I record this amount in my trading stock account? Let me see. I'll remind you again, my trading stock is an asset. That means on the debit side, it increases. There is my plus. But on the credit side, it decreases. There is my minus. So once I purchase trading stock, that means goods are coming into the business. It is going to increase now my trading stock. Hence, you see here I have my bank because I am posting from my cash payments journal. And what is the amount? 27,900. That is what you find over there. It therefore means if a business purchases trading stock on cash, it will record it in the CPJ. And when they record it in the trading stock account, they will debit the amount. Why debit? Because trading stock is an asset. Therefore, it will increase on the debit side. I am now going to move on to my next one. There is the arrow pointing to the amount. I'm going to move on now to the petty cash journal. What is a petty cash journal? So remember, the word petty means small. So when you talk about the petty cash journal, this is a journal used to record small cash payments. Small cash payments. Okay? Now, when you think of it, what would we be doing in the trading stock account with petty cash journal? How will the petty cash journal affect the trading stock? You will find that when we purchase trading stock, that trading stock needs to be delivered to the business. And in most cases, we will pay the transport company in cash. And once the amount is a small amount, we pay it, therefore, from our petty cash journal. And whatever we pay to have the stock delivered into our business should be debited, therefore, to the trading stock account. I'll repeat again. Whatever we pay to have the stock delivered in the business, we pay that in order to have the stock delivered. Therefore, we will debit in our trading stock account. So we come here in our CPJ, in our petty cash journal rather, and you find there is 960, which is the total that we have paid. But of that amount, 380 relates, therefore, to our trading stock. That means we need to post this to the trading stock account in the general ledger. Here is our general ledger. If I am to remind you again, trading stock account, what type of an account is it? Is it a balance sheet account or a nominal account? It is a balance sheet account. Hence you see the word balance. The next question then is it income or an expense, an asset or a liability? Thank you. This is an asset. Therefore, on the debit side, I'm going to repeat again, I find my plus. On the credit side, you will find your minus. It decreases. And then we have petty cash. From the petty cash journal, you see that amount there, then we bring it to the debit side of my trading stock account. It simply means whatever we have paid to have the stock in our business, we will debit it to the trading stock account. My good learners, I'm going to move on now to what we call credit journals. So far in cash journals, I dealt with three, namely CRJ, CPJ, and the PCJ. I'm now going to move on to my credit journals. And the first credit journal that I'm going to talk about is the debtors journal. Most of you just know it as the DJ. What is this DJ? The subsidiary journal in which all credit sales, take note, credit sales, remember now we are dealing with credit journals. So credit sales are recorded before they are posted to the general ledger. Only credit sales of trading stock are entered in the DJ. So will the DJ therefore affect my trading stock account? Definitely. So when I think DJ, I'm thinking selling to customers. Is it cash or credit? It is credit. So does it affect my trading stock then? Let me show you. Here is my debtors journal. And then I have sold goods, 12,800. But these goods had a cost price of 6,400. The next question then is, which of these two amounts affect your trading stock account? Is it the 12,800 or is it the 6,400? By now you can see what is your keyword, cost of sales. Cost of sales. That means I'm going to post the 6,400 to my trading stock account. There it is. Trading stock account, an asset. I think you've heard this several times today. On the debit, it increases, but on the credit, it decreases. When I am selling goods, follow me here, when I am selling goods to the customers, is it increasing my stock or decreasing my stock? It is decreasing my stock. So if it is decreasing my stock, on what side of the stock account will I record it? It will definitely be on the credit side. So you see here my 6,400, you find it therefore on the credit side, 6,400 on the credit side. Once you sell goods to credit customers, you find the amount in the DJ, and when you post it to your general ledger, you find the amount has to be credited in the trading stock account. Cost of sales, DJ. Let us go for an ad break. I will see you shortly.